All right, everybody, it's Bish here from the pit. That's basically how I start all of this. I've never done a webinar with so many people that don't have a clue who I am, more than likely. But my name is Ross Bishop. I run the pit futures trading. It's a Discord server. I have a YouTube channel that I post a lot of stuff to, so it's not just all paid. But I run the pit. I've been trading for about going on 11 years now. The first 3.5, I traded equities. Then I made the switch over to futures. And when I made the switch over to futures, I picked up Sierra Chart, and I've been using it ever since. I'm probably one of their bigger flag bearers. I just love Sierra Chart, it's a powerful tool. I've seen it come a long way since I first started. And there you go. I mean, that's my introduction. So the chat's open. Feel free to ask questions. If you want to jump on the mic, go for it. I'm used to being on the mic every day. The pit is a Discord server where the mic's open, so I'm always talking to a couple hundred people. I broadcast daily on YouTube the first couple hours of the market. And really, this is what I'm showing them. Just to give you all an idea, this is my chart book. I start off with some, I'm going to post it on, Vernon, I'm going to post it on YouTube. So y'all have to bear with me because I just kind of fly by the seat of my pants. I'm not like a prepared, instructor or anything like that. So I'm going to just take y'all through the steps. This is about order flow, and it's about, let me go ahead and talk about order flow for a little bit. It's the newest buzz phrase, right? So if you're on Twitter or you're on anything, I mean, you hear people talking about order flow, and it kind of sucks because order flow is really essential, I believe, to trading. And Sierra Chart gives you some amazing tools to be able to identify key areas and to be able to trade those areas based upon order flow. And what exactly is order flow? Order flow is simply a buyer and a seller coming together at a specific price. So you don't need custom studies. You don't need all the, listen, the pit's been around for about over 5 years now. And we've probably spawned off I've spawned off about 15 different rooms, and there's people out there selling order flow studies and this, that, and the other. And really what I want to tell you guys is that you really don't need it. You just need the tools that Sierra Chart gives you. And I promise you, with a little bit of time and some education, you will be able to become most likely profitable consistently. Now, I can't keep anyone from being an idiot. So if you have poor risk management and you just can't, you can't manage your risk, and you can't, basically do simple math and analysis, nothing's going to help you. You just won't be trading. But if you can exercise some logic and do some decent analysis, you're gonna stand a good chance. And Sierra Chart definitely gives you the tools to be successful. So let's see. So Liam, I will tell you that if you go to my YouTube page, I have how to create my chart book out there for free. So all you have to do is take the time to watch the videos, and it goes through these charts. So but that's something that we're going to do today. But listen, I will spend all day here. I'm on the mic all day in the pit, talking to, upwards of 300 people. I'll be here as long as you guys need me, and I'm waving my hand like y'all can see me being animated. But right now, the point is I'm going to show you how to do it, because Sierra Chart is it is not as intimidating as you might think. Now, the thing is about Sierra Chart, it can do pretty much everything. that alone in itself is intimidating, because really you just have everything at your fingertips. And believe me, with what everyone's out there talking about, you would think that you would need it all, but you really don't. The key to my trading is I keep everything very, very simple. Oh, I'll share my chart book. I'll share it, right? I'll share it at the end of the, I share it to people. I mean, it's shared in the pit. I'll share it to you guys. It's not a problem. But the thing is that Sierra chart, it has so much functionality, but really with what I use it for, I use probably a 10th. So, so let's go ahead and get started. We're going to go over the volume by price today. This is my main chart that I identify levels off of. We're going to talk about the market profile, which the market profile, if you go to my YouTube channel, I've got a video on it. It's probably the most overrated chart ever known to mankind. And I say that realizing that a lot of you in here might have actually paid for a Jim Dalton intensive, which I apologize that you went through that. But we're going to go through the market profile. We're going to go over the footprint. The footprint is a key, is my execution chart. And we're also going to go over this right here, which is my DOM. So we're going to go over the main charts that I use day in and day out to do my pre-market, and all the way through executing off of levels. And then also, look, in this chart book, because I'll give it to you, I don't have a problem giving it to you, I've got some contextual charts. I've got dailies. That was the RTY. I'm going to stick to ES today. I think we're going to do quite a few of these, so I'm not going to get over it all today. I've got a 240 that I use. That's the NQ. This is the ES. I've got a 240 chart with, obviously, all my charts are going to have volume by price on it, because that's absolutely critical in my trading. And then I go all the way to an hourly. Now, here's the thing. With what we're going to do today, I'm just going to take you through how I basically game plan every day and how I trade order flow off of levels. There's only a few charts that are necessary for that. And I certainly don't even watch them throughout the day, because once I set a level, I let the market come to me and then I trade off of that level. If I start trading out in the middle of nowhere where I might not have any levels, that's when I might get in trouble. So we're going to just stick to the charts that I utilize on a day-to-day basis, and I'm going to show you all how to set them up right now. So let's go ahead and get started. I'm going to move this off the screen, and we're going to go ahead and get started with just a blank canvas. So we're going to open up an intraday chart, and I'm going to choose the ES. And I'm going to go ahead and bring that over to the main screen here real quick. I forgot when I moved it off, it's not going to follow over. So here we go. So now we have just a blank. This is your run of the mill, comes right out the box Sierra chart, ES chart. Okay. So I don't even remember what they set them up as. It looks like a 1 minute. And we're going to turn this into my volume by price, the same chart that you guys were looking at when we first started. So here's the thing. The first thing that you got to do is you kind of listen. All of this is personal preference. Can I zoom my DOM? Well, I will. I'll bring my DOM over here when we get to it, because we're going to go through all of them. And I'm going to try to go fast. So because quite frankly, it's a lot of information, but we're going to get through it. So first and foremost, what you got to do is you kind of have to set this up. And listen, it's all personal preference, but I can tell you over 8 years of trading, 7 years of trading this with this chart book, I can tell you that I'm pretty certain that I know what the hell's going on. So I'm going to go ahead and set this to 1559.59, and I'm going to set this to 0829.59, and then actually, you know what? I'm going to set this to 1700, and then this. So there we go. So now what we have is we have RTH session and we have the Globex session. with the hour break in between. It's a 15-minute chart. And what we're going to do is go ahead and hit apply, and it's got to go ahead and do its thinking. One thing that we're going to do is we're going to end up hiding the bars because we don't really care about the bars. And I'm going to tell you all why in a little bit. Because remember, what we're trying to do is identify areas of order flow. Now, the thing about a volume by price is it's not order flow like real time. It's actually a dynamic chart that, it prints as the orders come in. But we are going to, for our purposes, we're going to use it to identify levels to trade off of utilizing order flow. So I don't personally consider the volume by price order flow. It's orders that have flowed and given you kind of a picture to identify levels. So let's go ahead and create that chart. So we got this right here. So I've set it up to a 15. I don't need the candlesticks, and it's the ES chart. And I would tell you right off the bat, put in 365 days. Now, while that's loading up, I'm going to go under analysis, and we're going to add some studies. So remember, this chart is specifically volume by price. And volume by price, it's a simple study. It's got every study I think is simple because I've used them quite a bit. But we're just not going to do much with it, okay? First, what we want to do is we're going to add a volume by price that's right aligned. So this one's actually fairly simple. We're going to come in here and we're going to, is volume profiles. That's what we're looking for. Ticks per volume profile for the ES, you're going to want to do 1. All right. So just remember, for as complicated as this looks, I want you to think about how simple this is. We're going to do visible bars. Now, some people, they like to do every bar that's in the chart. I'm going to tell you that a very solid option is just going with visible bars. Now, why visible bars? Because it allows you to adjust the chart to see only the most recent market generated information versus everything that you can bring into your screen. So sometimes you want to bring it all into your screen, and sometimes you just want to see this current week or the last 10 days or 2 weeks. So visible bars allows you to have your volume by price that is right aligned. So let's go ahead and right align this. I'm going to go ahead and hit apply right now so we have something to look at, and it's going to go ahead and load it up. But the reason why we want to have it right aligned in visible bars only is because it's going to allow us to kind of drag the chart around and introduce the data that we're interested in. So whether it be 2 weeks, 6 months, or whatever. Ricardo, that's a good question. Why 15-minute, not 5 or 30? Well, honestly, over the years, I've just come to believe that it's the best. Now, does it even matter? It only matters when you're exposing the candlesticks, okay? So when I bring the candlesticks into the equation, and I'll show you here real quick. Let me go ahead and do this. I'm going to go ahead and make this. Right now, you can see that it's just gray because I just have them filled volume bars. I'm going to actually do this as color-coded. So I like this because this is kind of like a heat map, right? It's exactly like a heat map. So this is telling me where my huge high volume nodes are versus my low volume nodes. Now, I like to take this chart and I like to bring it down to 0, right, on the time scale. I like to bring in as much data as I can, all right? And what I'm going to do is I'm going to lock this out. And I'm going to go ahead. I'm going to get to your question here in a second, Ricardo. And then you too, James. So give me a second. So let me go ahead. I'm going to go ahead and bring in another volume by price. So this one is the overall. And if you remember, I had all my sessions broken out as volume by price as well. So that one's a little bit more involved, but nothing impossible. Same thing. We're going to make this a 1 tick by 1 tick increments. And because we're going to do it based on the actual sessions, we need to change this over to, I think it's multiple profiles based on fixed time. And then once again, a couple other things I'm going to do. I'm going to change this to hologram, okay, because it kind of cleans it up a little bit for me. And then once again, I'm going to change it to a heat map type profile. So now you can see that rather than having the candlesticks in here, we just have the actual session profiles. Now, something else that I'll do is I'll bring in a time frame highlight, because I want to differentiate my overnight profiles to my RTH session. Okay, so go to time frame highlight, and I should have, mine should already be baked in. Sorry, I'm trying to scroll.
New visitor.
Geez, come on down. All right. So we have a time range highlight. So let's go ahead and bring that in. And we're going to apply this. I think I already have it set up correctly. Actually, I do not. Let's see. Make sure I got the right one. So time range highlight, let's go ahead and do this, and let's go ahead and set this up for, I want to do my to 082959. So what this is doing is this is highlighting the background for my overnight sessions, and I like this to be set to, I think I have it normally set to like 40. It's a little nighttime shade of blue. Now, what you're going to see is everything is in the same profile. So what I have to do is I have to come back into this study, and I have to differentiate and use a separate profile for overnight session. And once I do this, now you can see I've separated out my, I'm going to go ahead and unlock this real quick. I've separated out my overnight sessions from my RTH, and that's pretty critical. I'm going to tell you why. For this particular study, I'm going to go ahead and set the transparency level down just a hair. I'm going to get you all's questions, I promise. So transparency level, yes. And I'm going to set this to, I think I normally set it to about 70. So it just lightens it up a little bit so you can see, you can bring these forward. Now, let me get to some of your questions here real quick. So the only reason why, Ricardo, is because if I decide to look at my candlesticks, all right, and I typically don't use open, high, low, close bars. I use just candle bars. If I want to get here and look at how the candles go, it's just literally a personal preference type deal. I don't use a 5-minute candlestick or a 1 minute or a 30-second or really anything for that matter. If I'm going to use a candlestick, it's going to be a 15-minute, and I'll use a 30-minute, but why will I use a 30-minute? Because the market profile is legit just a 30-minute profile. It's a 30-minute candlestick. It's just in a market profile format, alphabet or blocks, whatever you use it. So I will use nothing less than a 15-minute candlestick chart. If I want to come in here and say, all right, let me go ahead and just hide this study. And if I want to do some candlestick type analysis, right? So if I want to look for, I'll give you a perfect example right here. So let's say that I want to look for a consolidated breakout POC. I find that on a 15-minute chart, that is the absolute best way for me to personally identify areas of consolidation. So take this area right here, and let's say that I want to take a volume profile, and I want to draw it over the consolidation, and then I want to identify the POC. So I'm going to identify the POC. I'm going to stretch it to the end of the window, highlight it, yes. So what I've done is for me, I like to use 15-minute candles. I don't use anything under a 15-minute candle, or I use trade-based. I don't typically use time-based stall. I use trade-based candles. So we'll see that on my footprint. But so what 15 minutes allows me to do is it allows me to easily identify areas of consolidation, because what I will tell you is, and what everyone in the pit would tell you is that this is a tried and true, almost damn near fail-safe method of identifying a level to trade against. So look, we have an area of consolidation. You have a nice Gaussian curve on the volume profile. You break out, right? So you break the high, you come back, you back test the POC, and then you take off. That is a method that I use of trading anytime I can identify it. And the best way for me to identify it is using a 15-minute candlestick chart. So, but for my pre-market analysis and just my everyday, like identifying support and resistance levels, I'm strictly using the volume by price. So I hope that makes sense. It's nothing against 5-minute. Maybe for you, identifying areas of consolidation is perfectly simple on a 15-minute chart. That's fine. Or on a 5-minute chart, that's just not that's not my deal. Okay. So I like to use, get rid of that. I like to use 15-minute. That's it. And then for my analysis, what I'm doing is I'm looking at the overall, and this is the difference between introducing all the parts of it, all the bars available, or all the sessions available, I should say, which would be 365. So if I go into here and I open up this to all bars, or all, I forget what it says exactly, all bars and chart. Okay, so that's taking every 15-minute candle over 365 days. If I do that, you can see I get this crazy, I get a crazy volume profile right aligned. For me, I like to be able to go into visible bars, and I like to introduce the data that's important to me. So if I want to bring this back and say, all right, we haven't been down in this area since, this was back in January, I can look back, I can bring this back and say, all right, well, what did price do back in January? Okay, back when we traded down this area, what did it look like? I know that I've got a high volume node here, low volume in here. I know that when we pulled back, we have a POC that we clearly took off from. So I want to identify that as a level to trade against. When you pull this all the way forward, and you get down to, and you say, all right, well, we haven't been down in this area forever. Well, maybe that level comes into play. So for me, it's just a much easier, much cleaner view. And typically I leave my charts just about like this. Now, one other thing, if you want to get a little bit, and I'm going to get you all's questions here in a second. I'm trying, like I'm under the gun. I want to make sure I respect everyone's time. So if you come into the actual session profiles, another thing that I like to do is identify the point of control. All right. So I'm going to go ahead and highlight the point of control, and I'm going to extend the point of control to future intersection. So what that does is that tells me on a session by session basis where the points of control are, and those are actual critical levels. You can see right here, very critical. We came right into this point of control overnight, and we sold off from there. You can identify these types of deals on a session-to-session basis. Right here, you can see the point of control for this overnight session, and we dropped down to the lows of this past week. So identifying the points of control is also very, very critical in analysis in terms of where orders have flowed. So let me get to some questions here. Does everyone, was that pretty clear? I mean, you can see, and obviously I'm recording this, so we're going to, we'll go back and you can go back and watch this, but this particular chart, and then I'm going to get to some questions, is absolutely critical for me, because what I want to be able to do is I want to identify where the high volume nodes are versus the low volume nodes on a long time frame level. And I'm not watching the actual price right now. But what for me, and in that document that I posted that you guys can have, What's critical for me is on a longer time frame chart, or with more data introduced, where are my low volume nodes? Now, why am I more interested in low volume nodes versus high volume nodes? The reason is because it's much easier for me. If you look at where we came up into today, and if you look straight back across, I mean, we're not doing pre-market analysis right now, but if you watch my pre-market, I went over this. It's on YouTube. The reason why I'm more interested in low volume nodes than high volume nodes is because low volume nodes are areas of where price accelerated through, and generally there was lack of interest in trading in those. So as we get back to them, I generally look for levels, like for example, this POC right here, to reject off of and trade back through the high volume node. Okay. So if you were paying attention to, or if you were watching my pre-market, so in the pit every day at 6 a.m. my time, I'm doing pre-market for the group. And I'm just giving them my analysis. We have so many smart traders in there. They've got their own analysis, but I give mine. And what I would have showed you is I say, hey, look, listen, I'm looking for these different areas to be defended. Okay. And as they are defended, I'm looking to trade back through them. Now, what happens if we broke this level? Well, then I'm looking to trade this high volume node above. Well, why am I not picking necessarily high volume nodes on the longer time frame, particular levels? Well, high volume nodes by definition are areas that we have traded all the way through. Okay, so we have traded all around them. So it's very difficult, other than a POC, to identify an area to trade off of in a high volume node. That's where you get your chop. That's where you get your rotational trading going on. Very difficult to trade in a high volume node. But if I can identify low volume nodes to trade against, then it's easy for me to take a position in a low volume node and ultimately look to trade through the high volume node. I hope that makes sense. So that's where this, and then on top of that, okay, well, now how do I identify levels in here to trade against? Well, if on the longer time frame, I'm not necessarily looking at that, because as a retail trader trading on a short time frame, I am looking for levels based on the previous sessions and how those volume profiles traded out. So I might look for example, today in the overnight session, we had a high volume node with a low volume node right against it. So what happened on a very short time frame? Look at this low volume node right here. And if you look at today where we opened up and we came right down to it, and we've been bid ever since. So this chart on a high time frame level, on a longer time frame level, you can identify areas to trade against. And then on a session by session level, it allows you to identify the areas that you want to trade against. So I hope that makes sense. Now, this kind of feeds into James. You asked, can you talk about data feeds at some point? I have SC Connect with IB. IB, first of all, okay, so let me go ahead and tell you right now. This has nothing to do with me being a rah-rah cheerleader for Sierra Chart. But when I first started trading, I was using Sierra Chart with Transact, and I had some shit data. Ultimately, I left Transact because that's what my friend told me to do. So then I went to Tradevate, and I was utilizing Tradevate with Sierra Chart and CQG. Now, granted, that is not obviously IB, which has its own problems, but they're similar. So Interactive Brokers and CQG, they package their data together and they send it over to Sierra Chart. And that's a very high level, probably shitty description of it. But your data is absolute crap. You've got to go with Denali. You have to go with, when I went from CQG data and CQG order routing to Denali, it was like my freaking world opened up. It was insane. My volume profiles looked different. My DOM was different. The pulling stacking on the DOM, which we'll talk about, was completely different. You have to figure out a way to get yourself to Denali data. It is the standard bearer, in my opinion. I'm not going to say, and I understand like Rithmic. I think Sierra Chart and Rithmic are playing nice again. I don't use Rithmic. I would tell you, you're doing yourself a disservice by utilizing Interactive Brokers data because it's crap. CQG data, they give you like nothing in terms of real-time data or historical data, so your volume profiles never look complete. And on top of that, when they send you data over to your DOM, it's packaged up, so your bid stack looks like thousands and negative thousands, and it's always different. It's just crap. So I would tell you that you got to get away from IB and you got to get to Denali. That's just the simple answer. And that's not because I'm a Sierra Chart fanatic. That's because Denali is the best data that I can find out there. But there you go. So it's definitely worth it. And it's the cost of doing business. Even if it costs a little bit more, it's just not that expensive, especially when it comes down to putting your money on the line and trading against with solid data. So Tom Martin, I hope that answered your question, and I've got questions lined up, so I'm going to try to get to them all. So in the tick settings for NQ, I would use 4 to 8, Tom. I do trade the NQ. I can tell you that my settings for the NQ are, I'm going to show you right here. I'm going to bring it over so that you can see it. We detach it real quick. Now I just got to find it. I've got so much shit I'm sorry, I shouldn't cuss. Some people will tell you that the number one thing they get out of the, no, I'm just kidding about it. That's that. So here's my NQ chart. It's the exact same chart. It's the exact, I trade NQ a little bit differently, Tom. I trade it low volume node through high volume node to low volume node. I don't trade it by specific levels because, as you know, if you trade NQ, it doesn't really stick to levels all that great. There's a lot of swing and a lot of play in it. But if you look at my study settings here, I have this set. It's got to be, so I have it to 1. But if you do it, if you want to do it, and you want it to be a little bit less granular, I would recommend 4. Or you could even do 8. So you can see that it's, I'm probably actually doing the wrong one. Let me see here. Let me see if this one's it. Okay, so I was doing the wrong one. I apologize because they're flipped on my charts from ESNQ. So me personally, this does not do me very good, okay? If you could step it down to 4, geez, come on. You step it down to 4, a little bit better, but you can see how solid everything is. So for me, I still keep it at 1. And the reason being is because the way I use this chart is like this. This is how I'm looking at it on a day-to-day basis. Literally this much data brought into it. So I easily identify with single tick where my low volume areas are. Like this was a low volume area that I had planned on today in pre-market. You can see we dipped right down into it. You can look back on the previous sessions, and this is something critical for NQ traders. You can see that there was absolutely no interest trading down in here the last 2 times we were down in this area. We backed into this area. There was no interest in trading, so everyone's getting long, especially above 14,000. So, so that's that chart. But I use it, and I'm seriously looking at it with only this amount of data in it. So 1 tick does fine by me. If you open it up like this, you're going to want to go to 4 or 8, but I don't. So, so for me, 1 tick works just fine. You don't think using tick chart can give you more info, more accurate? No, I do not, Ricardo. Now, and the question is, Ricardo, are you calling a trade chart a tick chart? Or are you calling a tick chart, or are you actually calling a tick chart a tick chart? But either way, no, I do not. because I'm not using the bars. Remember, all I care about are the actual individual volume by price profiles. Does price tend to move toward the POC or away from it? Well, the POC is generally, so like I was saying, what this chart does is it helps me identify the high volume nodes and the low volume nodes. I want to trade from the low volume nodes through the high volume nodes to the low volume nodes, right? Your POC is going to be probably right smack dab in the middle or somewhere around it, okay? Now, this particular POC is going to be, I'll just give you for an example. So let's go in here. I don't have it highlighted, but I'm going to highlight it. And let's go ahead and just extend it both edges. Okay, so for the data that I have in this particular window right here, my POC is all the way up above, it's what, about 45.05. So we all know that that's a critical level if we ever get back to it. But here's the thing. So generally price, when a low volume node is defended, right, you generally gravitate back towards the POC. Now the question is, do you trade through the POC and you trade to the other side of the high volume node and just trade all around it? Or do you break away from the POC and establish value higher? So that particular question, it's both. But you have to be able to you have to identify what kind of day are you in. Are you opening up, dipping into a low volume area, trading back to POC and through it? Or are you going to get back to POC and just trade all around it? So that is a real-time decision, or that's a real-time analysis that you have to do. That and keep in mind, I'm not looking at this chart during the day. I identify my low volume nodes and my levels, and I impose them on my footprint, which is my execution chart. Because as we'll get to, I want to identify those when the market pulls into those areas. I want to see certain things on the footprint, which is real-time order flow, okay, to be able to base my chart on, and we'll look at that going forward. POC are usually where maximum trades happen. Important thing if your value, yeah, of course. So POC is the most accepted price, okay? That's where the most lots have traded. It's the highest volume node. So let's see here. So the POC is like a springboard. It can be, but it cannot be, Ray. It's just not that simple, man. You can get hung out on a POC. You know, look, our long-term POC, and I don't want to get sidetracked here, but I'm going to because I always do. And listen, I know people are going to peel off. This will be recorded. I'll be here as long as there's people here asking questions. But if you look at this particular chart right here, you can see from and this is going to kind of speak to your question there, Ray. And I think it was you've been the one asking the POC questions. So from all the way back in August of 2020 through today, our POC is 43.25. All we've been doing is going away from it and pulling back to it, getting underneath it and pulling back to it. Today, we just happen to be pulling away from it. Now, the question is, are we going to break from this high volume node through this low volume and ultimately start trading through this high volume? Right now, we've just dipped the toe into it and fallen back underneath. And we can see that on a more close level, on a more shorter time period right here. But in your overall analysis with volume by price, you can see that we've just been rotating all around 43.25 and haven't been able to get away from it. Today, we're pushing away from it. The question is, can we break through this low volume node and start trading up here, which our natural target would be 44.80 if we get, or 45.05, which is on the shorter time frame, our POC. Okay, so on a very long time frame, we're just sitting right around our POC. Okay, all the way through it, back and forth to it, bounce to it and through it. So I hope that answers your question. Okay, so let's see here. Listen, so are there any questions specific to this chart? This is, I will tell you right now, and I've done quite a few order flow courses. If you go to my website, you'll see I've recorded them and there's videos out there. But everyone that I've kind of taught this chart to, and I'm not the inventor of this chart, believe me, I learned it from somewhere else. But the people that I've brought this to, every one of us use it on a day-to-day basis to identify levels. And on the ES specifically, the levels, they work to the tick if you get good enough at refining the overall structure versus the intraday sessions. This chart is where I start my day. So, but low volume also means more volatile market, more risk. No, not necessarily. What it means is that when you have low volume, it means that the price accelerated through an area and there was no trading activity. So and then you establish value higher. So potentially. So basically you left a high volume node. We all know if we're watching today, we rapidly accelerated through and we just got hung out on this high volume node. And we pulled back into this low volume node. And now we're trying to get accepted up through here. And ultimately what's probably going to happen is we're going to probably price probe at the end of the day and end up here. So the question is, can we then accelerate through this low volume node and end up here? Okay. So that's what this chart is really good at helping you identify, are those areas that you're going to have to get through, because they're like wormholes. They're either open or they're closed. You either get through them or you reject from them back into the high volume node from which you came. How do you identify a low volume node? Well, okay, so right here, you can see low volume, right? This is a volume by price profile. So we're identifying low volume here. This is clearly a high volume node, right? We're leaving behind a low volume node on a long time frame, but look at today's session. We just scooted right through it and we left no volume on the session. So from what my analysis will be, if we are unable to get accepted up in here, okay, which basically means if we're unable to break this POC, this high volume node, and get above it, which it just feels like today's one of those days we're going to price probe, but we might not. We might sell off at the end of the day and end up here around POC. So what would that mean to me? That means that if we open up and we pull back into this low volume node, I'm going to be looking for signals to get long until we can lose this low volume node and start trading back underneath. So yes, essentially, Ray, yes. If we get through and accepted above this low volume node, I would be looking for longs against it until it fails. And we end up back down in here. Now that's a very simplistic way of looking at it. I utilize other things like more recent market generated information, like the market by market profile, which we're about to get to. Hey, Bish, 4360 was and continues to be a low volume area. We just ripped right through there. What was different between 4360 and 4396 for me? Okay, so 4396 right here and 4360 right here. Okay, well, so here's the thing. This is a long-term or a longer time frame because it's right based, right? So it's taking in all the information from back on this chart. So what's the difference between this low volume node and this low volume node? You want to know what the difference is? When we went through this low volume node, the market was bid. Now we're getting some two-sided trade and we're just kind of chopping it out, building volume. Okay, so when we ripped through here, the market was bid. And I would guarantee if I went back and looked at the DOM and replayed the DOM, which everyone in here should know how to replay Sierra chart, probably one of their greatest features, you would see on the DOM, I would guarantee you that the market was bid. It was stacked on the bid and you were having aggressive buyers lifting the ask. So they ripped it through this low volume area, low volume node where there was no resistance. Well, now what do we have? We've pulled up into this low volume node, and the difference is that we have major resistance here. So what's happened is we pulled up into this resistance. We found some people willing to do some two-sided trading, and we're just chopping it out, building a high volume node right here. Do I use large volume to trade, like large high volume nodes, Sebastian? Man, and y'all are going through I got so many questions stacking up. I want to get through them, and I'm going to do this. I'll be here all day. You know, like that's my commitment to Ray and Sierra Chart. So I'm working through them as fast as I can. Do I use large, I'm assuming high volume nodes to trade? I try not to initiate trades in high volume areas, because that's typically where you get your most chop. You get your most non-directional. It's just up a little bit, then down a little bit, then up. And then you're just kind of rotating all around the pocket. I will tell all of you this. If you let the market come to you where you want to do business, you will be infinitely more successful than going to the market and doing business where the market wants you to do business, okay? Remember, what happens in high volume areas? In high volume areas, that's where the big players get to do business, okay? Someone that has thousands of lots that they have to get into the market doesn't choose a low volume node. They get their business done in here. That's why you get chopped. That's why you get, it's just very difficult to trade. So what I do is I let the market pull back into an area that I want to do business. And then I initiate business with the market. I don't say, all right, well, the market wants to do business in here. I'm going to go ahead and try to do business with the market. I'm a small fish. The players that are playing in here, I cannot compete with, and I can't do anything about. But if the market pulls back into a low volume area, I can choose to do business there. Now, obviously, I'm not using this chart to do business. You're looking at a footprint and a much shorter time frame chart as a retail trader. So I can identify areas or levels to do resistance in here, but just not based on this chart. Okay, this chart is I'm identifying where I want the market to come to for me to do business, not the other way around. Point of control, yes, equals point of control. So 44, man, it said I had 17 questions, but I guess I've been going through them. So 44 becomes resistance if we don't get through close, and then we go back to 4350, and could you run through 40, and then could run through 4300. So always pay attention to century figures. Let's just watch the close. Experience tells me that this thing is probably going to price probe, but ultimately it doesn't have to, right? We could fail to take 4,400 and we could fall back down to POC. Okay, that's the difficult thing about taking a trade right now later in the day. Our POC is still down here. We're trading up at the highs. I tend to feel that the market wants to go back to the point of control. But you just have to wait and see, because it's late in the day. In all likelihood, at the end of the day, if we open up M period right here, we're going to suck the POC up to here, okay? So, and if that's the case, I would be willing to lean towards this thing's probably going to price probe. But I will tell all of you right now, and this is what I tell everybody in the pit, I tell them all the time. If you have not made money, if you've made money before noon, shut your charts down and go about your day, go do something else. If you have lost money before noon and you decide to trade in the afternoon, well, let me go ahead and put it this way. If you've made money before lunch and you decide to trade the second half of the day, you are more than likely going to give back money. If you have lost money and you decide to trade the second half of the day, you're probably going to lose more money. If you are dead even going into the second half of the day, you are very likely to lose money. So where we're at right now, I would tend to think that the price would pull back into here. But as we get later into the day and we get towards the close, you are very likely to have the bigger players start balancing their positions and putting a lot of volume in up here, and you're going to shift this POC up. Now, the question is, do we price probe or not? So, and it's going to get extremely volatile. So your question is, does it become resistance? 4,400 is a century figure. It's automatically resistance. Okay. My background is technology consulting. I can tell you right now, algos are programmed to be short and to defend century figures. Okay. If they get it above 4,400, you're going to find yourself probably up in here at the end of the day by the time the market shuts down. That's just, so whether or not it is automatically resistance, Kishore, is what I'm trying to tell you. Whether or not we get through it or not, or we fall back down into this POC is another question. We just don't know. Was there something which would allow you to get long today before the 4312 low volume area? So 4312, yeah. So like I was telling you, so the beautiful thing about this chart, and look, man, I'm not trying to sell the pit or anything like that, but I actually have Essentials of Order Flow videos that would specifically tell you exactly answers to your question. So what I'm looking for is, okay, where was our open today? I'm not looking at it right now. Let me just see what our open is. I'm going to throw a line out here where our open is. So our open today was roughly like 43.2725. So let me just throw a line out here. 43.2725. Okay, so that's roughly our open. Okay. Now, what I'm looking for is, okay, what occurred overnight? Well, we certainly were, once again, lack of interest trading the lows. We have a low volume node here. Okay, so where would I want to get long off of if on any pullbacks? Well, you have this low volume depression right here. You could say, all right, if we pull back into this low volume depression in the middle of this high volume node, you might want to get long. But let's just say, okay, let's just say that you don't want to do that. All right, that you don't want to initiate a trade in the middle of a high volume node. Completely respectable. And that's typically how I trade. Well, you're looking at the opening range. You're looking at the open. You're looking at the market to go bid among the levels that they give you. Okay, so you might not want to make a trade off of this low volume depression right here. Okay, that's perfectly fine. That's legit. That's a legitimate reason not to want to get long. But you also have the 1 minute opening range. You have the open, right? So you're watching the DOM. You might want to get bid after you get above the open. I actually went long twice. I've had 2 trades a day in the ES, and I was up 14 points before I shut down to get ready for this meeting. So there were other signals to get long, but there might not necessarily be anything right here that tells you to get long. Maybe you want to go long if you're bid over the overnight POC. Okay. So there might not be anything that told you to get long without getting down to here, but it might be the open. It might be the opening range. It might be getting bid above the POC. It might be taking out the overnight high. So there's other things that you can look for that are important to a retail trader and that I look at that would tell me to get long, and did in fact tell me to get long. Based on this chart, okay, based on this chart. So question, if when you get time in sales, I am going to get to time in sales, do you use the option to combine into exchange reported? No, I do not. Absolutely not. I do not. And I'll touch on that. Because I use time and sales very, very specifically with audio alerts and visual alerts that tell me exactly what's going on. I don't need to combine the orders. Okay, so does anyone have any more questions about this particular chart? I mean, we're an hour in, man. Listen, I get all geeked up talking about this stuff, so I'm still ready to go. But you guys tell me. If there's no more questions, then we're going to move on to the next chart. I will share that. Okay, so look, here's the deal. I'm going to go ahead and I'm going to nuke this chart. Okay. I'm going to nuke it. All right. No one has any questions on this. Why? Hold on. So why don't use a heat map? This is actually a heat map. This is set up to be a heat map, Ricardo, a heat map based on volume. Now I use what you're talking about. I use the oh my gosh, I'm drawing a blank because you're pulling me off. So on the footprint, I actually use a what you might be considering a book map, okay, which is the Sierra chart is the oh my gosh, I'm gonna have to pull it up because you're calling me out. You got me off my script, so I'm gonna have to go. I'm gonna have to actually pull it up. Market depth historical graph. That's right. Thank you, Frank. Market depth historical graph. All right, so you threw me for a loop there, asking me that right off the bat, Ricardo. So, okay, so if there's no more questions about this, I tell you what I'm going to do. I'm going to nuke it. All right, and we're going to go over to the next chart, and I'm going to save this off. All right, for people that want this chart book, I'm going to put it in the meeting right now. But I'm going to get it set up. Now, remember, there are some floating charts. Okay, so who told me to remember to post? Okay, Brad, so you're asking me to share. So look, I've got some time and sales floating around. I've got a DOM floating around. I've got some stuff. I've got a tick chart floating around, but I'm just going to give it to you right now because you're impatient. And I like it, so don't worry. So let me go ahead and save this off. And I'm going to post it up in here because Brad is impatient. Just give him shit. He's probably like, all right, asshole, whatever. Ray's probably like, oh my God, this is all over the map. But listen, this is a shit ton of data, guys. Like there's nothing you can do about this. But the thing is, it's just not that difficult. Once we get through it, you're going to be like, man, that's not nearly as difficult as I thought. All right, so here is my chart book. There it is. Okay. So let's create another chart. How about that? So, and listen, we're basically going through this in the exact way that that I use this on a day-to-day basis. So let's go ahead and let me detach this and bring it back over to my main screen. Okay. So now I'm sure everyone here has heard about the market profile. Once again, on YouTube, I have a video on this. I just posted, oh wait, it's in direct message. Shit, I direct messaged it. Hang on a second. Because people are actually messaging me in direct message rather than, so give me a second. There you go. That's to everyone. I accidentally sent it directly to Chad. All right. That's right. Okay, so there's the chart book. Okay, so who here has not heard of the market profile? It is quite frankly the most overrated chart in the history of charting, but it does serve some very good purposes. So we're going to get into that. Mainly adding a volume by price. Let me tell y'all something right now. Every chart that you use, if you utilize the volume by price with it, you're going to be 10 times as strong as someone that doesn't. So creating a, once again, let's just go ahead and do this. I'm going to go ahead and set this to 1559.59 and this to 1700. All right, so now we have our overnight and our RTH sessions, okay? I'm going to set this to, actually, we'll just leave it at 30. So it really doesn't make a difference because once you add the study, really what you want to have is your times set up, right? Isn't volume maximum at POC? Yes, it is. Your POC is your point of control. It's the most volume traded. So to create a market profile, all you do is come to studies and you go to TPO, all right? Because it's time price opportunity, all right? That's what TPO is. And quite frankly, it should be called a TPO, not a market profile, but it is a market profile and it is a TPO. They're one and the same. So go ahead and add your, you're going to go ahead and add your study, right? So your TPO profile. and we're just going to hit apply. Okay. And it's going to give us the out of the box settings. Let's let it load up. Let's see here. Now, this is your out of the box market profile settings. Okay. Now, in that document, I kind of stipulated what I consider, and this is what I consider to be the most important aspects of the market profile. Listen, the market profile is a great way of identifying balance. Okay, so this would be balance right here. It's a great way of identifying double distributions. It's, you know, there's a lot of things that tells you kind of the psychology of the market, but that's really it. Let's face it. For everybody that thinks the market profile, you know, is the market is ran off the market profile, it's not. It's a 30-minute candlestick chart. In a nutshell, the market profile at its core is a 30-minute candlestick chart in alphabet soup form. Nothing more, nothing less. If you paid a ton of money for someone to tell you any different, I apologize. But I hope you got something out of it. But that's just the fact of the matter. It's a 30-minute candlestick chart. But it is very clean. It's very clean to look at. So let's go ahead and set this up. And the best thing about a market profile is you can put a volume profile to it, and volume profile makes it worth something. So let's go ahead and set this up. So letter block, increment and ticks, 1. For the ES, it should all be 1. Time period, you don't touch that. Days, multiple profile, 30-minute. Okay, so let's just go ahead and apply as we go along. All right. So we just set that to single ticks. And we're going to go ahead and just walk down the deal here. So display total TPO count. I would say yes. I literally just posted it up above to everybody. TP. So I like to display the TPOs. All right. So that's kind of just telling us the TPOs there. How many TPOs? TPOs, by the way, is how many. So A, B, C, D, E, F, and G. That's your TPOs. So we also want to set the, let's see here, let's see, new period at session start when using evening session. You want to set that to yes. All right. So look what that's going to do. That's going to separate our evening session. Let's go ahead and do this while we're at it. So remember our time range highlight. We're going to go ahead and add that. We change this back to 1700 to 082959, and we're going to set this to 40. Oops. So what we did just there, just to let y'all know. Come on. So what we did was we separated the overnight sessions from the RTH sessions. Okay. And that's pretty critical. All right. You definitely want to do that. Let's go ahead and finish setting this up. So we have none. And then we want this to be letters. And look, this is all personal preference, guys. Oh, sweet, Liam. I will get you hooked up as soon as I get out of here. I apologize. Normally, I like to get people in the pit immediately when they join. So, okay. So now what we see is the profiles separated out. Okay. Each one of these letters is a TPO, and how many times you traded across this price is how many TPOs you've had at this price. So 8. So FGOR, whatever. Okay. So that's your TPO count. Now, something that I do is I'm not going to spend a ton of time on this, but you have my chart book, so you're going to see it. But the thing that I like to do is I like to set my font nice and small. Okay, so it's set to 10. I like to keep it like 5. So a lot of people are going to say, man, that is awfully small. And it is. But when you break it out like this, okay, it starts to make a little bit more sense. All right. So what's key about the market profile? Okay. It is not order flow. All right, let me tell y'all right now, the market profile is not order flow. Anyone that tells you they trade order flow and they're like, yeah, I trade order flow. And you're like, oh, really? What do you use? And they're like, well, I use the market profile. Just be like, so that's a 30-minute chart. How are you trading order flow? Okay. Market profile is absolutely not order flow. It's context. You're getting to see, for example, today's a trend day. We left behind single prints. All right. So see, a lot of people ask, well, what's single prints? These are single prints right here. How do you identify single prints? Well, they're single TPOs. All right. Very easy to see on a market profile, not so easy to see on a 30-minute candlestick chart. So what's most critical about the market profile? Well, I mean, look, the overnight high, the overnight low, the previous day high, the previous day low. Okay. Those are all very simple retail specific levels. All right. Value is critical, right? So you can see value in here. So now that we have this set up, I'm just going to do this, right? I'm going to bring over my chart. So this is the chart book that I posted up. And this is how I just set it up for you. But this is what it looks like on a day-to-day basis, okay? So what I did was, for the previous day, identify the previous day high, the previous day low. Identify the overnight high and the overnight low, okay? I've identified value. I've identified the POC for the session. But most critical is the volume profile, all right? So for this particular chart, what I want to do is I want to come in here and I want to add a volume by price. So I'm going to add the volume by price. And when you hit apply, it automatically sets it for the volume profile for the TPO chart. Okay. So I'm going to come back into the TPO chart. And I'm going to do a couple things. All right. Because, and I'm going to say something controversial right here, especially if you are a market profile purist. Time means nothing. It's all about volume. Now, if you're a market profile purist, your head might have just exploded, and I apologize. But the fact of the matter is, time means shit. It's only about volume. You cannot tell me that if we're in the middle of the summer and we sat here and spent 20 hours hovering over one specific price, but there was no trading, that matters, that price point matters just because there was no one active in the market. It's all about volume. So everything that I do with the market profile, I want the market profile. I look at it. It's on my main screen. If you were in the pit and I'm sharing, and where I share my screens, you're always going to see the market profile. But why? Context. Where are we in relation to yesterday's value? Where are we in relation to yesterday's high low? Where are we in relation to overnight low, overnight high, overnight low? So when I come in here to my market profile, I base everything off of volume. So if you come in here and align volume profiles to that, you can just leave that alone. Let's see here. Value area based on, I'm looking for value, let's see. Sorry, I wish y'all could understand exactly how impossible this is on the fly. Wherever you know everything is, all of a sudden it's never where it is when you're looking at it. Okay. So highlight TPO value area, you don't need to do that. You want to base, so value area highlight based on volume. Yes. So you can see, watch this. I'm going to move this out of the way. Let me move this out of the way. Watch this value right here. So let's go back to that. So highlight volume based on, so let's see here. Let's see. Highlight value area highlighted based on, watch when I change this to no. So see how the green shifted down, the gray shifted down. The gray is actually, I think the green might be the value. But see how it shifts? It's basing value based upon where you spent the most time. You will never convince anyone that has two brain cells that just because you spend time in an area, it matters more than where you actually traded volume. Okay. So you want this based on volume. Okay. That's going to give you the value area on your TPO based upon volume. Now let's come over here and I want to show you how I actually set up my volume by price. So first of all, I think you'll do yourself a better service if you switch it to hologram. Okay. So now you have a hologram, much easier to see, right? And now you can set this to based on your heat map. Okay. So apply that. So now what this is showing you, if you use my setup, I'm not telling you that it's the best, but I'm telling you I've been doing it long enough to know that it's not bad. It's showing you where your low volume nodes is. This becomes critical when you are trading down back into an area. So for example, we're trading up here right now in M period, which God knows we're probably in M period right now. So, or in L right now. So if you pull back into this low volume node, what would you expect? You would expect for the price to, you would be watching the volume as it pulls back, especially if you're using a footprint, to pull back and for the volume to fade off. Why? Because the interest is trading up in here. Okay. Now, if you were to pull back and drop through this low volume node and start building volume and trading volume down here, that's a different story. Then it's telling you that it wants to be accepted in this high volume node. But what I would be looking for, because the market's been bid all day, I'd be looking for, if we do pull back into this low volume node and ultimately trade back through this high volume node and probably look for the price probe at the end of the day. Does that make sense to everybody? So the market profile is a good chart. Okay. It's not, I don't want to, but it's not more than what it is. Okay. So what I want to do is I want to identify the high of the day. I want to identify the low of the day, typically by red for me. Okay. I want to identify where value is. Now, why? Why do you want to identify where value is and where the point of control is? Now, this is probably the point of control based on the TPO, but actually it probably wouldn't be. Never mind. I don't know what this, oh, this is, I don't know what this these lines are, but I'm just not going through all the settings right now. But the fact of the matter is, I want to know where value is. I want to know where my low volume nodes are. And this is going to become important because, yeah, right now we're not looking at specific real-time order flow. What we're looking at is areas to identify, to be watching order flow. Okay. When we get back, what does the footprint do? What does the DOM say when we get down into this area? Are they really hitting the bid with size? You know, is the footprint fading off and giving you a completed auction and a buy imbalance to go back long again? You know, we're identifying the static levels that are necessary when it comes time to watch those real-time order flow type deals. So this is the sort of thing that I'm looking at on a day-to-day basis or on a session-to-session basis. And I know I'm going fast and I'm trying to cover everything. But that's how you set this chart up. This chart, and then listen, after this, everything else is just by your preference. What can't be by preference is volume versus time. If you're a time-based trader where you think time runs the market, you're wrong. It's all about volume. So you have to, that's just the fact of the matter. So that's the only thing that's not preference. You have to set it to where it's not based on time and where it's based on volume. Any questions on this? Does everyone understand it? Man, I know I'm flying through it so fast, but I'm trying to get to where we want to be. Pretty simple to set up, right? So it's not difficult to set up at all. Literally, you're creating a chart, you're applying the TPO, you're applying a volume by price. And then if you want to highlight your background, you can highlight your background. Everything else beyond that is strictly just whatever you prefer. What do you prefer your colors to be? You know, I like my colors to be, I like my colors to be white and purple. That's just my thing. I don't know. I think it's sexy. I don't know. You set it up the way you find it sexy. So why not use a 30-minute candle chart versus volume by price rather than TPO? Okay, well, that's a valid question. Go look at a 30-minute candlestick chart. You can do everything that you do on a market profile with a 30-minute candlestick chart by adding different studies and stuff like that to identify the high, low, and the close and everything like that of the day. Certainly, when you see my chart book, I've got it set up to where I identify the 1-minute opening range. I've got my open copied over from my 1-minute chart. I've got my various opens, my Globex open, my RTH open, the China open, the Jap open, the European open. I've got a lot of things going on in here that I suggest you take a look at. But the fact of the matter is, to do this on a 30-minute candlestick chart, it's just not nearly as clean, Ron. The best thing about a market profile chart, it's a clean look. And quite frankly, when you're trading, you just want the cleanest look possible. Or you should. So I'm not going to take the time to go out and create a 30-minute candlestick chart. You can go do that. It's simple enough. But just take a look at a candlestick chart and the things that you have to do to give you what a market profile gives you. All right. Does anyone have any questions? And listen, guys, I'm going to work it out with Ray to where we can do each individual chart over a session if you want. And I'll do this. I love doing this. I do this for a living. So I like I said, I get all geeked up talking about it. I could talk about it for hours. And I do daily. So does anyone have any questions about this? I think this is such a clean, such a critical piece, because you can identify your low volume nodes, identify value. You can listen, the most important levels to a retail trader is the most recent market generated information. Previous day high low, overnight high low, value, point of control. Okay, low volume nodes. And you can identify those very easily and readily on this chart. You can also do it on this chart. Okay. This is how I tell you what, I will, if you subscribe on YouTube, you'll see me go live tomorrow, because I do a live screen share on YouTube for the first couple hours. It's delayed 15 seconds. And like I said, I'm not here to sell y'all access to the pit. I could give a shit if y'all join the pit or not. The pit is great. You should check it out. But I do it live on YouTube. I will go live at 5 o'clock in the morning, at 6 o'clock my time, 7 o'clock RTH, and I will go live for pre-market. Pre-market is typically something I only do for the pit, but tomorrow morning I'll make it live for everybody, and I'll walk y'all through how I set up my pre-market levels tomorrow based on this chart and based on, I can't see because those words are right there, and based on this chart. And I'll show you how I actually walk through these charts and set up my day in pre-market. So I'll do that tomorrow on YouTube. Typically I do it and I record it and then I post it. But I'll do it tomorrow. And I have no way of communicating to y'all that I go live, by the way, unless you actually, okay, yeah, and another one. But if you subscribe to the YouTube channel, which I don't get anything for that, it's free, you just get notified when I go live. So otherwise, I have no way of notifying you guys that I go live. So are there any questions about the particular setup of this chart? It's, you know, it's not that difficult. This is a very basic, like I said, everything after this is very specific to what you want to look and see, and it's all self-explanatory. No, I go six. I'm live every morning, 6 o'clock my time for pre-market for the pit. That's not a normal thing that I do live for everybody. I go live on YouTube at RTH Open. Brad, at the very top of the text, I posted all the links. If you just got here, look at the very top of the chat. I posted a document that I wrote on order flow, and I posted links to YouTube and to my website. Okay, can you explain the IB? Can you not? Oh, you can't see it? I thought you could see it, man. I'm sorry. I thought that you could go back and see all the chats. Here, let me just post it again real quick along with that document, because that document is critical to how I use these charts. Make sure I don't just message Chad. So there's that. And then everyone grab this document. I just thought y'all could scroll up. I didn't know that you couldn't see all the charts. Let me get this document to you guys.
New visitor. New visitor. New visitor.
So there's the document, Essentials of Order Flow. It goes over all these charts as well. All right, so, okay. So now let's go. Is everyone ready to move on to the footprint? Okay. So we're about to move on to, oh, hold on. Well, that's a big question. Hold on. I want to make sure I get everyone's questions too. Can you explain the IB portion? Yeah, of course. So the IB is the first hour of trading. Okay. So the IB, let me see here. Let me do this real quick. Hang on one second. That's right. So the IB, I'm going to just bring over my chart since it's already set up. I don't want to bore y'all with the details. And by the way, on YouTube, I've done how to create these chart videos out there. They're in their own playlist. So you can go watch these over again, because I know I'm skipping over a lot of stuff and I apologize. The IB, I watched two different opening ranges, three. I watch the 1 minute opening range. I watch the 1 hour IB, the initial balance. Okay. And I watched the 30-minute opening range. These two, the orange and the green, these can be set in the TPO settings. Okay. So if you come in here, you will find the initial balance range, 2 periods. It's the first hour. Each period is 30 minutes. And then you can do a 30-minute opening range as well. So I do that one as well. Because now your question is, how do I use it? Yeah, I definitely use the IB. So there's a couple things. One, if you get accepted outside of the IB, the typical thought process is, now listen, what I'm about to tell you guys, do not freaking run to the bank with this, because I don't believe in it so much, okay? Because I've seen so many market profilers, and I've been doing this for a long time. I've done this with other market profile people that are just diehard market profilers. So what'll happen is you'll see people that will be like, oh, we broke the IB, I'm going short. Oh, we broke the IB, I'm going long, back here. It's not that cut and dry, okay? But the thought process is that if you have a huge initial balance, you could potentially spend the entire day in the initial balance, okay? If you get accepted outside of the initial balance one way or the other, then the thought process is you will go the other direction. You will go that direction. So if you get accepted outside of the IB low, you go lower. If you get accepted outside of the IB high, you go higher. Now, here's the problem with that. I have seen people immediately get long, but look, we broke the IB high and then we came back down in. Are you going to sit through 10 points fucking heat? No, of course not. So it's not just straightforward cut and dry, but the thought process is if you get accepted outside the IB high, you go higher. If you get accepted outside the IB low, you go lower. If you have a massive IB, you could stay in the IB and just rotate. All right. Now, there's the 80% rule. Whereas if you leave, let me see if I can find one. So you leave the IB and then you get back inside the IB, 80% chance you trade through the entire IB. Okay, happened right here. But did you just drop straight through the IB? No, you dropped into it, you came down, you came back up, you dropped back down, and then you got back through it. So it's not like it's just cut and dry, but that is a very market profile thing to do. I am not a market profile purist. You would never catch me going long outside the IB simply because we broke the IB high. Okay. You would never see me going short the IB just because we broke the IB low. I'm not going to sit through the rotation through back inside the IB to ultimately be right. You just know that you're going to be right or not. So do I watch it? Yes. Because if we get accepted back in it, do I look to trade back through it? Yes. But I'm looking at other things to confirm that I'm not just taking the trade because we broke it one way or the other. Does that make sense? Yes, I'm going to post today's webinar up to YouTube. Absolutely. Okay. So, all right. So I hope that works for you, Frank. Okay. So, hey, Bish, speaking of doing a separate Zoom call, something that would be great for, and we will do more Zoom calls. I'll work it out with Ray. I hope that, if you guys are finding this worthwhile, I love it because I'm a true believer in Sierra Chart and I love helping them out. And, it helps me out. It gives pit exposure. So there you go. Speaking of doing a separate Zoom call, something that would be gratefully useful, maybe in another Zoom call, would be to replay, let's say RTH during the LBA. Okay. So I actually did a course on this, just by the way, and we actually do that. We actually go back and look at real-time order flow or order flow at these different levels. But yeah, we can work it out there, Hodge. Hodge, what the hell? You're in the pit. Come on, man. Oh, all right. Okay. Okay. All right. So if there's no more questions to the market profile, I will move on to the footprint. And let me go. Okay. Going on to the footprint. Here's my footprint. I'm just going to show you all my footprint right off the bat. So this is my footprint, okay? This is my baby. I've been using the footprint since before. Listen, when I started using the footprint, everyone had a hard on for the market profile. And I've been using the footprint forever. I've used every iteration of the footprint, 5-tick reversal footprint, 30-minute footprint, 1,000 trade footprint, 20,000 volume footprint, 60-minute footprint. I've used them all. I have settled over the years on a 20,000 trade footprint, and I've settled on or an hourly footprint, depending upon what the market's doing. And let me tell you something right now, the best thing that you guys can do, and I think personally the best thing that Sierra Chart does is it gives us a massively strong footprint, which it is just such an amazing chart. And I could go on and on and on and on about it. But getting into the footprint, I want to tell y'all right off the bat, everyone should be using package 12 plus advanced plus MBO with Denali data. Okay. If you're going to be serious about order flow and serious about using the footprint and the market profile and the volume by price, package 12 with MBO, advanced with MBO and Denali. I think it's package 12. I think they're at package 12 now. It's the highest level. That is going to do you the best service. And the reason being is because when we get to the DOM, okay, which I'm going to go ahead and I'll show you right now. So this is my DOM that I apply to it. When you get to the DOM, it's just such a critical piece. With the MBOs, like people are always asking me, are MBOs worth it? You're damn right they're worth it. You know, everything about it's worth it. Denali, absolutely worth it, because CQG and all the others are shit when they give you the data that they put on your DOM. So, okay. So that being said, everyone should be doing that because it feeds into utilizing the footprint and everything else. So let's go ahead and do this. Let's turn this off. Whew, I'm going to take a break real quick. Not a break. I'm going to take a drink. All right. Man, this is a marathon. Oh, crack my neck. Okay. The footprint. Let's go ahead and create one. And I understand, man, this thing, it's got some pretty intimidating settings on it. I'm going to go ahead and just say this right off the bat. My footprint is set up the way I like it. You will now all of a sudden that everyone's using footprints, there's all these different variations, right? There's the volume profile in the bar. There's all sorts of different things. What you have to understand about me is I keep things extremely simple. Okay. I do not believe in custom studies. I would never pay for a custom study. I do not believe in a bunch of freaking hocus pocus, lagging indicators and stuff like that. I'm not saying that they don't work. What I'm telling you is I believe in keeping everything as simple as possible. Okay. The more simple, the better. And the way I utilize the footprint is about as simple as it can get. Okay. It's faded volume, completed auction, imbalances. All right. And I've been using the footprint forever. So I'm going to go ahead and tell y'all that I'm an SME on it. But the fact of the matter is, the more simple that you can keep it, I think the more successful you're going to be. So let's go ahead and get started putting this thing together. Let's go ahead and delete these lines. Okay. Whew. Let's go. So first and foremost, you just start with your regular out the box chart. Okay, so just launch an intraday chart, and this is what Sierra Chart's going to give you. Go to your numbers bar. Okay, go to your numbers bars. This is the footprint. Okay, they don't call it the footprint; they call it the numbers bars. But I'm going to tell you it's the footprint. All right. Let's see here. I do have to pay a little bit of attention to my wife. She's messaging me right now. I never put trading ahead of her. So, okay, so we've added the numbers bars. All right. And when you click apply, it's going to give you this kind of mess. All right. It's not a mess. It's going to give you a very generic, bland look, something that, right. And she's hot too. So I'm not about to put you guys in front of her. She's smoking hot. So let's see here. So this is what you get. Okay. This does nothing for me. So what I'm going to show y'all is, and I'm biased, of course, because I've been using it forever, is what I feel is, quite frankly, the greatest way to set up the footprint that will show you three things that are very visually easy to see, to look for in order to take trades against what? Against the levels that we predefined in the other charts. Okay. And I hope that y'all show up for the YouTube deal tomorrow morning, because I'm going to show you how I walk through it. And then if you watch YouTube live tomorrow at my live stream, I'll show you how I trade off of it. So let's go in here and let's set this thing up. So this is the very generic look. All right. So let's come into settings. And remember, for me, the only thing that we're going to focus on is the number one column. Okay. Okay. So I'm just looking at the column one. Okay. So are we price probing to the end of the day? Oh man, I'm just watching this right here. So anyways, okay. So we want to focus on column one. and we're going to customize it to where it's very, very simple. Okay, first and foremost, we want to set this to be bid volume by ask volume. Now, why is that? I'm gonna annotate on my screen, okay? And listen, I'm gonna assume that all of you know this, but I've done hundreds, or not hundreds, I've done over 100, probably about 150 one-on-ones in my life. I don't do them anymore. I have no interest in, I can't, it's not a benefit for anybody for me to do one-on-ones. You can't learn anything in 2 hours. Price works like this, okay? So you have 100 and 500, okay? You have 450 and you have 450, all right? Price works to sellers. Let me change my color. It works at the diagonal. It works to sellers selling top right to bottom left, and it works buyers buying from bottom left to top right. They are lifting the offer. They are hitting the bid. Okay. And it's about the aggressiveness between the two that moves the price. Okay. And listen, I'm the worst on screen and fucking drawer ever in the history of the world. So don't hold that against me. But price works at the diagonal. All right. It does not work side to side. If all you ever had were resting orders on the bid or on the offer, the price would never move one tick. It takes sellers hitting the bid or buyers lifting the offer to move the price. Okay. So what we're doing is right now is we're setting this up, and let me split this out. I'm going to spread this out just a little bit so we can see it better. The way we're set, oh my gosh, I accidentally clicked reload. So the way that we're setting this up, you can't listen? What do you mean? What did happen? Can everyone hear me? Okay. Someone tell Frank that it's him. Someone tell Frank that it's him. Okay. So the way that we're setting this up is, I'm going to set this out. I like to have it set to like 92. It works best for me. Hang on. Okay. So remember, because price works at the diagonal, okay, you want to have your orders broken out by the diagonal, okay? And we're going to look for imbalances, all right? Imbalances being buyers are taking control over sellers or sellers are taking control over buyers, okay? So to do that, we set this by bid volume, ask volume, okay? The bid volume is the sellers hitting the bid, and the ask volume are the buyers lifting the offer, all right? And I'm sure that that's obvious to everybody, but believe me, there's some people that don't know that, and that's fine. We all started from somewhere, but I have to say it because I know there are some people that don't know that. We're gonna go ahead and leave that full background. We're gonna set this to transparent. Let's see, to none, transparent. And then we're going to set this to coloring method based on dominant ask vol, bid vol. I believe it's, let me see here. Let me see this real quick. Hang on one second. Let me make sure I get it right. Based on diagonal dominant side, ask vol, bid vol percentage. Okay, so we're going to set that. All right, so now it looks like we got Christmas trees. Okay, but that's all we got to do. Okay, so we can skip column 2 and skip column 3. Now listen, you guys, more than welcome. Knock yourself out. Make it as complicated as you need. I'm going to keep my shit simple. You make your stuff as complicated as you want it. I will tell you this: the more simple you have it, the better trader you're going to be. All right, so let's skip all this. We're not going to use the pullback columns. And let's go to the POC because we want to identify each bar POC, okay? So point of control highlight, we're going to keep it to yellow. Highlight the point of control, yes. And we're going to extend it until future intersection. I'll make that clear why when we start looking at the chart itself. Oh, and one other thing that we're going to do, listen, you want to set these middle settings on your color, the 0 range to white, okay? And then hit apply. Okay, so keep those white. You're going to do these. You can set these to bright green, all of them on the bid. And you're going to set these to bright red. All right, I want to make sure that I set this up for y'all exactly the way I set up myself. It'll make sense here in a second. I think that's already there. Okay. So, and also under your subgraphs, go ahead and set your point of control the same as your box. So what this has done is, let's go ahead and take a look at this real quick. What this has done is we have set it up to where it's bid vol by ask vol. Okay, this is the bid column volume. This is the ask column volume. We've identified the point of control of each bar and we've extended it on. Now, my personal preference, I'm going to go ahead and set this up. My personal preference, and I would tell you that everyone should at least give it a shot. I like it trades per bar and I like it 20,000. Okay. This is just after years of experience. So let's go ahead and let that reload. Okay, so I base this off, I like mine based off of 20,000 trades. So what that means is every single bar, 20,000 trades occurred with who knows how much volume, but it was 20,000 trades. Now, I'm not going to tell y'all that my way is the best way. I'm going to tell y'all that you should at least give it a look. All right, let's go back into the settings. We've identified the point of control. Let's go ahead and set up. Let's see here. Let's do, I'm actually cheating here. I'm going to set this up to this. Let's do green, red. We're going to set up our open marker up box color and our closed marker down box color. Okay. We're going to set those to column 1 because that's the column that's the only column that we're using. And what this is going to do is this is going to give us our candlesticks. Okay. Because what a lot of people get worried about is, well, I'm not going to see the candlestick. Yes. 20,000 trade. No, Ron, for NQ, I do not use the footprint. It's much too thin of a market and it makes no sense. I tell you what, we can do a separate webinar altogether on footprint or on NQ if you want. So watch, when I hit apply, you're going to see these guys right here. This is your open and close markers, okay? But what we want to see is this would tell you that the bar opened right here and it closed down here. Actually, it actually opened, yeah, wherever, open down, open up here and close down here. So what we want to do is we want to see the actual bar itself. Okay. So we're going to do, what do I have it set as over here? Open to close boxes. So look, so what a lot of people think is they're like, well, if I use a footprint, I'm going to lose the candlestick. No, not true at all. You can see that this is an up candle. It started right here and it ended right here. You can see that this was a red candle. It started right here and it ended right here. Well, where are your wicks? Well, you have but the fact that there's no body of the candle right here, you have a wick. Okay, you have a little bit of a wick right here. This would be a doji. I'm not a doji trader guy, but this would be a doji right here. Okay, so you have a big ass wick right here and a wick right here, and you got a little bit of a doji, a little bit of a bar candle right there. So that's how you're identifying the actual candlestick. Does that make sense to everybody? Just stop me if I'm going too fast, because I understand that this has gone on forever. Remember, I'm on the mic from 6 o'clock in the morning until 3 o'clock in the afternoon. So this is nothing for me. All right, so let's keep going. So now you can see what is separating our bid volume versus ask volume. It's a little line. I like to have it be a little X. I don't like the little line there. I like it to be by, because it's bid volume by ask volume. Now I'm going to spread this out a little bit, okay, so that it's easier to see. And then I'm going to, now for me, I like to have, so we have that. I like to set my my font small, okay? You guys have to set it to whatever makes the most sense for you, but I like it to be 8 by 8. So go ahead and hit apply. And let's see here. So automatic width, 8 by 8, and set this to no. So what that's doing is that is setting it up to where the font is nice and small. I can still read it just fine. But what do we still have? We have these it's red and green everywhere. So what this is telling us right now is, based on Sierra Chart's out of the box settings, we have these itty bitty ass percentages for imbalances. Okay. So you're getting imbalances up and down the bar. What I like, and listen, this is tested over time and you guys can figure out what works for you, but I'm willing to tell you that I've pretty much got it freaking nailed down. I like to set mine to 400%. So 4, 4, 4. Now remember, we're only using column 1, so we don't care about these down here. Watch what happens when I hit apply. Oh, look at that. We get our nice little 400% imbalances at the highs and at the lows. Okay?
New visitor.
So it cleans up our bars very, very clean. Now they're very, very clean. Okay. And actually, I think I have a mistake. If I'm not mistaken, I think I have a mistake up here. I'm gonna have to fix it real quick or I'm never going to be able to sleep. I set this to this has got to be ask vol bid vol percentage based on ask vol bid vol percentage. It's got to be on diagonal. That's where I got it wrong. See, I can tell right away that this is not correct because 3 is not 400% greater than 40. Okay. I automatically know 86 is not 400% greater than 68. So I automatically knew I had a mistake in here. Okay, so let me go ahead and fix this based on dominant ask vol bid vol percentage. Based on diagonal dominant side ask vol bid vol percentage. That should be it. There you go. So now you can see it flip over. So 40 is 400% or greater than 3. All right. 267 is 400% or greater than 47. Now, what is this telling you guys? This tells you, because remember, price works at the diagonal. Okay. So this is telling you that 267, 400% greater were the buyers buying this thing up than there were sellers willing to sell it down. Does that make sense? It's telling you right here, that buyers were 400% greater than at buying it up at this extreme than there was one person in the entire world was willing to sell this price. You want to talk about the loneliest person in the world. One person was, one trade of one lot was selling 69.25. 26 were willing to buy it up. But do I really care? Do I really care that it was 26 buying it? Based on dominant ask volume, bid volume. What are we doing right now? Hang on one second. Give me a second. I was going to say, it sounded like we were just price probing. So here, I'm going to show you right now. And remember, this is recorded and is going out on YouTube. So the proper setting, I chose the wrong one because I chose dominant side. I didn't choose diagonal. So it's based on diagonal dominant side, ask volume, bid volume percentage. Yeah. So what that is telling you is that, okay, let me ask y'all a question. 27 were willing to sell, but the price went up. So what does that tell you? See, some people are going to say, oh, well, they're trapped. I would tell you that trapped is the wrong word, because there's no one on this planet that's puts on a trade and gets their fingers handcuffed or their hands handcuffed and they're not allowed to get to their sell button, or they don't have a stop in. But this tells you that these people sold this extreme, but look at the faded volume, that they were alone. So they ended up getting run out. And I would tell you, everyone that was selling this extreme was the fuel that lifted this thing higher. Okay. So right here, look at the high right here. 30 sold, only 6 were willing to buy. Price moved down. Okay. 18 buying, 3 only selling. Price moved up. Look at this, 24 sold. You have kind of, this is a wash to me. You have a buy imbalance and a sell imbalance. You have some people selling in the hole in a bad position. So there's the footprint chart. Now, listen, there's a couple other things that I do. Okay. That is it. That is literally the footprint chart. That's as simple as it gets, right? So if you were to look at the rest of the settings, they don't really matter. I don't even touch them. You can come in here and do whatever you want, but I don't have a need to touch them. But I will tell you this, when we first started this webinar, we talked about establishing static areas of interest. What I like to do is I like to use Bollinger Bands to kind of give me a dynamic area of interest. Okay. Is everyone, do y'all want me to kind of go over the I went over how to set up my footprint. Would you like me to go over the Bollinger Bands real quick? Okay. Hodge, you're in the pit. You can ask me at any time. All right. So let me answer this question from Ricardo real quick. You are not losing time if you wait to the end of 20,000 trade bar. No, you're not. That's exactly right. So listen, the only thing about that, Ricardo, is that let's just say that you were using a 5,000 trade bar. So this bar would actually be broken out into, I'm going to explain it all, Franklin. So if you take a 5,000 trade bar, that would mean that this particular bar, any one of these bars would be broken out into 4 specific bars, right? So at the extremes, you're going to get these same imbalances. At the extremes, you'll get the same imbalances. But here's the thing, on a 5,000 trade bar, you're going to have 4 times as many extremes, right? Because each bar has its own high and low. But the extremes of the 20K will be the extremes of the 4 individual 5K, and you're going to get the same imbalances. But you might have more, you're going to have more extremes as the bars are broken out. Does that make sense? And listen, I love the 5,000 trade footprint. I love the 10,000 trade. I love them all. I love the footprint. The footprint's my baby. I've been using it since the footprint was like, no one even used it. So I'm not going to tell you that one way is different than is better than another. You have to decide for yourself. I'm telling you that the 20,000 trade works for me. Would you please explain imbalances and unfinished auctions? Yes. So this, when you have a zero bid or a zero offer, that is a completed auction. Look right here, 35 by 45. I consider that unfinished business. So let's just say I'm looking at potentially shorting the market. I'm going to keep in mind that I've got unfinished business up here. Okay. If we push higher, and so this is the market right now. Is the market dropping? Nice. So we pushed to, we made new highs and we have a zero bid. So this tells me that there was no business left to be done up here. Now that is a very simplistic explanation. I'll grant you that. But that's how I view it. So that is a completed auction. That is an incomplete auction. This auction has now been complete virtue of this bar right here. Now the business is complete and the market is sold off. Okay. Now, if I have unfinished business right here, how do I, do I not trade against it because I figured they're going to come back up here and complete it? Not necessarily. We're just in the middle of this entire range. So there's been a lot of business in here that's not necessarily been complete. But I know the high of the day, there was no more business to be done up here and the market sold. Okay. Does that make sense? Now I'll get into the imbalances. Okay. So for me, imbalances is a very critical way for me to trade. Now I'll grant you this. Yeah. And Dan, I'm actually going to get into the DOM as well. But these past few days have been a little bit testing, you know, in terms of being able the volatility and the range and stuff like that. But when I'm trading up against a level, what I'm looking for, I'm just trying to find a good example. I'm cheating a little bit. So what I'm looking for up against a level is, and I use POX intraday to trade off of. So I'm looking for faded volume completed auctions. Didn't get one. Probably wouldn't take that trade. Right? I've got into this POC, I've got faded volume, completed auction, and a buy imbalance. So what does that tell me? I know from this bar POC, buyers took control. How do I know that? Because we freaking ripped and we left the bar POC behind. So when we revisit this bar POC, what am I expecting? I'm expecting buyers to maintain control. Not only that, but volume faded off. So all the interest was in trading up here. I can see in the footprint, all the volume up here and the volume fading off. On top of that, I get a buy imbalance and I get a completed auction. So I can take a trade with very minimal risk off of this bar POC. I'm taking a drink here real quick. All right. So if I'm looking to short, okay, we push higher, and I'm just running through examples here. This is not like I would want to short this. I'm looking to other things as well with the DOM and whatnot and time and the time and sales. But look at this candle. So this is a green candle. It pushes up into a completed auction and a sell imbalance. All right, interesting. I'm going to let this be my setup candle. Now I'm interested in this candle, the way it opens up. This candle pulls back. This candle opens up, initially goes higher. Volume fades off, completed auction. Volume fades off, completed auction. Where did volume fade off at? Well, shit, right to where this volume faded off at. That's a short. Probably a short right as it gets underneath this bar POC, right? And then you're in for the move down. This candle pushes underneath this POC, pulls back. This candle opens up right here, pulls back. Underneath this bar POC, look at the volume fade off. All this volume up here, this is telling me, hey, not a lot of interest in trading down here anymore. Take a long. Look to catch some shorts that were shorting this thing. Ride it back up. This is all running stops right here, by the way. Okay. This is all running stops. Okay. So there's also a thing called poor structure. This is poor structure. Poor structure gets repaired and gets repaired fast. What the hell's going on in the market, man? Sorry. I got to look. Are we dumping? Nice. All right. So does that make sense? And listen, I have a whole video series on this stuff, and you can go find them on my website. Look, I'm never trying to make money off of you guys. You can go buy them from my website, but if I love the footprint, and I would love to hook y'all up with some footprint videos. If you want them, you just need to reach out to me, and I will give you my footprint videos that I normally charge for, because I want y'all to understand the footprint. It is so badass in terms of trading, and Sierra Chart does such an amazing job at giving us such a badass footprint for trading that I want to help you guys out in that. And like I said, I don't care if you ever join the pit. You might not ever join it. You might think, oh, it's not for me, whatever. That's great. It's not for everybody, but I'll tell you this, those videos, you will never find a better deal and we go over how to do all these charts, how I trade off of them, how I identify levels. It's definitely worth a look for you guys. But like I said, I'd love to help you out. Okay, let's look at poor structure. Okay, this is poor structure right here. See all these imbalances back to back to back? Well, Franklin, I'm not going to give them all to you. I can't do that. Too many people have bought them, and it's unfair, but I will give you some footprint videos for sure. So let me give you my, God, what is a good way to do it? Jeez. I don't want to get too sidetracked here. Here. You can reach out to me in Discord. Oh, actually, I just sent that to Ron. Y'all got to stop direct messaging me. Okay. So I will make live for 24 hours, actually until Friday. I will make live my footprint videos, but then they're going back private again. But I want to hook y'all up, because I do think that they're definitely worth it. So this is poor structure right here. Geez, man, I could go on forever, and I know we're so long in the tooth now. Are y'all comfortable with the footprint and how to set it up? I have a video on YouTube that will go into extreme detail. The question is, how do I use it? And a lot of people use it. So anyways, do y'all want to move on to time and sales? We still have time and sales, and we still got the DOM. Or I can ask Ray if he wants to do another one like soon, next week or something like that. All right, let's get into it. All right, you're already here. All right, Hodge, you're always here, man. You're in the pit. All right, so let me tell you, Alex, the footprint is a game changer. If you can get comfortable with the footprint, you are going to be a better trader. I can't tell you that you're going to stay in the game and you're not going to blow up, but I can tell you that it's going to help you not, if you get into it. Okay, so, all right, so let's go to time. So look, essentially, this is how I went over how to set up the footprint. I'm going to nuke this chart. Actually, you know what? I'm not going to, yeah, I am going to nuke it. All right, so let's nuke it. But I'm going to show y'all real quick my footprint and the way I use it, okay? So I use mine, I'm going to scrunch it down just here a little bit, with Bollinger Bands, 20-period look back, and with a volume profile histogram on the right, okay? So real quick, because I know we want to get to time and sales, what do Bollinger Bands do? First of all, I'm a math guy. So Bollinger Bands is essentially telling you based upon 20 periods, and my periods are, remember, 20,000 trades. So what's 20 times 20? So for that many trades, I am looking back at the mid, and I'm looking at where the second standard deviation and the third standard deviation is, because I know that if I trade outside of these areas, these dynamic levels, that I am trading 95% and 98%, 96%, 98% away from the fair value. Okay, the most common traded. Okay, all trading has occurred in here, not out here. So what does that tell you? That tells you that the market better be hella bid if you're going to be pulling outside of these bands. Okay, so I'm utilizing the footprint, and I'm also utilizing a volume by price histogram to tell me, based upon the visible candles, where my pocket is currently in low volume nodes and high volume nodes. Okay, that will be in the videos that I'm going to make available until Friday, and then I'm going to put them back up behind the paywall again. I'm sorry, I have to. It's only fair. So, but I want to hook you guys up. So, anyways, so that's the footprint. All right. Now, let's look at time and sales. First of all, does everyone know how to create a time and sales? Like, I don't want to go over shit that's okay. No, Franklin. Yep. Barry, you do. Frank, but you're in the pit, then you're not allowed. All right. You're not allowed to ask questions. Okay. So listen, the time and sales is absolutely the way Sierra Chart allows you to set it up. And I'm sure they're all like that. I don't want to say that Sierra Chart is the only one that thought of this, but the way that they allow us to play with it and to utilize it is awesome. So if you don't know how, just go into your chart. Listen, every chart gets its own time and sales, okay? And no chart can have multiple time and sales, all right? Some people run multiple time and sales, some to see big lots, others to see no filter. I use my time and sales for the ES specifically like this. I do not combine. I only care about time, price, and volume. I filter it to 5 or greater, and then I have my highlight and volume and alerts set to 100 and greater. Okay, so a lot of you have been hearing these audible alerts during this webinar, and it's based on this setup right here. This is the setup. Okay, I would tell you that this is a pretty solid setup for the ES time and sales. Now, why do I have it set up this way? So now to create your time and sales, okay, you come under the chart, okay, and you under the specific chart that you want to create a time and sales for, and you just click open time and sales window. Okay, so this is the out of the box, run of the mill Sierra Chart setup. Okay, green buying, red selling. Will you tell me a reason to combine, Chad? I would tell you that I use the time and sales. So my time and sales never leaves my site for the ES or the NQ. Right. I couldn't tell you a good reason to. But what I can tell you is the way that I set up my time and sales, okay, is specific to what I want to know. I want to know a few things, and it's in this document. So remember, I gave everybody this document. And also I've got a good video on it too, but I'm not going to make that one free. So, but I do have a free video on how to set it up to exactly my specification, my settings. So if you have this document, you have my entire setup. Okay. There's also a video on how to do it online. And I gave you that document up above. Now, I want to see a couple things. I want to see buying and I want to see selling. I want to see our buyers covering, and I want to see our shorts covering. I want to know if large lots, 100 lots or greater, are buying or selling. I want to know if buyers are taking lots off the bid or off the ask, or I want to know if sellers are buying off large lots off the bid. Okay, and I set my time and sales up so that I can hear it or I can see it out of the corner of my eye and I don't have to pay attention to it. Okay, I don't want to have to do the math. All right, I just want to know what's happening at that specific moment in time. And if you were in the pit, you're very familiar with me saying yellow on the tape, blue on the tape, because that's probably most critical. I set mine up so that if there's yellow on the tape, I know shorts are covering. If there is blue on the tape, I know that longs are covering. Why is that important? If I'm long and I see price, I see the time and sales ripping, okay? And it's coming into an area that I anticipate finding resistance. And I see blue on the tape. And I know that that means that longs are covering. Do I want to stay long? Probably not. If I'm short and I'm coming into support and I see yellow on the tape, do I want to be short? Maybe not. Shit, I never want to be short anyways. I don't like short in the market. But anyways. Now, if I'm long and I see yellow on the tape, is that validating my position? Yes. If I'm short and I see blue on the tape, is that validating my position? Yes. Now, it's all visual. It's all visual. Look at my tape right here. This tape has been running since we've been live. Longs covering, heavy selling, longs covering, shorts covering, into buying, shorts covering, long selling, longs covering, into heavy selling. I mean, it's just visual, guys. Like, I'm not stupid, but I'm not the smartest person in the world. And if I can make something visually so that I don't even have to pay attention to it, then I'm more powerful for it. It's just simple. Okay, I just keep shit simple. That's it. So how do I set that up? So remember, for this specific chart, there is specific settings, right? Now I could just do this and it's going to automatically set it, but I'm going to show y'all how to do it. All right. So come down to time and sales. Remember, I'm using my specific chart coloring settings, not global. All right. That's key. I'm not using global. I'm using for the specific chart. And what I do is I look at bid trades background, bid trades text, below bid trades. What is a below bids trade? That would be blue. Now, technical definition is, if you look at Sierra chart, yeah, exactly, Frank. Frank, you're in the pit. Absolutely. So here's the thing. A below the bid. Well, how can you sell below the bid? Well, Sierra chart's technical definition is lack of record. So, but for our purposes, all we care about is that they basically they're sweeping the book. They've got to get out in such a hurry of their position that they're taking everything at the current bid and below it to get out. Does that make sense? Okay, so ask trades. So this is buying, so it's green, okay? Ask trades text, above the ask trades. So what would make someone buy above the current ask? Lack of record, they're sweeping the book. It's a short position covering. getting out in a hurry. Yellow on the tape. Listen, if you're in the pit, you probably go to bed at night hearing me say yellow or blue on the tape. I mean, it's like it's a legit thing. It's probably a disorder now for some people in the pit. All right. Oh yeah. I'm sorry. I had my all my positions flatten out at the end of the day. So I got an alert coming up. Charts run through your head all evening. I know, man. Me too. Okay. So, but that's it. Now you can take your, okay. So then there's bid highlight color, highlight text, which is kind of gay. I don't like that color. Not that there's anything wrong with that. The ask highlight color. Okay. Deep blue. I like to set mine to deep green. Get rid of that color. Okay. So now we're going to set this up and we're going to clear that. The market's not doing anything right now. What did I just do? Hang on one second. Bring it back. Now I'm going to take away, I don't need the grid lines. Okay. So at the end of the day, did I open it up for this chart? Which chart did I open it up for? Because my chart settings are not actually, they're not actually governing it. So I think I opened it up for the wrong chart. But the fact of the matter is, I'm going to go ahead and just do this. So what that's telling me is right then at that second, right there, in all of this buying, remember all this buying right here, someone just covered a position and they probably covered, this is probably them covering right here and all the way through 78.50, all the way through 78.75. Okay, you can see them covering. And on the blues typically happen in selling. So they're covering, or longs are covering their position, and they cover all the way from 78 through 77.75. Now I'm not getting any alerts right now because we're 3:17 and there's really no alerts going on. It'll probably happen about 45 minutes from now, but you've been hearing alerts. And the fact of the matter is when a trade happens, 100 lots or greater, I get an audible alert. If it's a buy, it's one. Here, I'll just tell you right now. I'll show you right now. So what are my alert sounds? I don't have any set right now. So let's do that. Let's just do 100. Color row. Oh, actually, you know what? No wonder. So let me just do my alerts on this one. So alert 21, and some of y'all might not know this, alert 21 and alert 20. Okay, if you go under global settings, general settings, and alerts, you can set alerts, okay? So for me, I have alert number 1. Well, let's do 20. Let's do 20 and 21. So I have it this. So when a trade hits 100 lots or better, I get that if it's off the ask. So that would be a buyer, 100 lots or better off the ask. If you take my chart book, by the way, you're going to get alerts. So just know that. So if I do alert 21, now if I have 100 or greater hit the bid, I did the same thing. What happened? Oh, no wonder. Wait, did I choose 21 to begin with? Hang on, something's going on. They're all doing this exact same damn thing. Select. All right, so there you go. I don't know why it's doing the exact same thing. Probably because it's on the fly. But my alerts will give you a deep horn or a loud beep. So I have my alert, and you got to set up your own alert sounds the way you want it. And just by the way you do that is take your alert settings into your Sierra chart folder. I just go download from free wave sources and you drop them in here. Okay. So I drop them in there and then you assign them under global settings. You'll take under alerts, you go alert 1, for example. All my alerts are sounding like that. I have no idea why, but whatever. So, and you just assign them. I actually can't stand the way they change these windows, but I'm sure there's a good reason for it. Let's see. All right, let's try this stupid thing. But anyways, oh, if you don't assign, you'll get the default. Okay, I got it. So anyway, so I'm not going to go through all that, but that's how you do it. But the fact of the matter is that my tape is set up so that at any given time, either I'm staring at it or through my peripheral vision, I can always see what's going on here while I'm in a trade. And that is absolutely critical when I am in a trade. And let's say I'm coming back down to the previous day high, which is what this level is right here. If I get down here and I start seeing yellow on the tape, then I know that shorts are covering into this level, okay? If I am pushing the high of the day and I see blue on the tape, I know that longs are covering into the high of the day, okay? So that is absolutely critical to know. And I'm telling you right now, if you set your tape up similar to the way I have my tape set up, you will be a better person for it. Massive blue going through on the tape right now on NQ. Whew. Does everyone understand time and sales? I mean, I'm flying through this stuff like it's crazy. I get it. All right. And quite frankly, I think everyone in the pit, like damn near everybody in the pit, has their time and sales set up exactly the way I do. Like, okay, Dan, the doc, I already, I don't know if you're in here late, but if you just scroll up, I already put the doc in there, and I'll do it again. I'll add it again. My folder at. All right, I'm going to keep on adding it until everyone has it. Well, here's the thing. So I'm going to create a specific playlist with those videos in it because I will not make them live on YouTube. Yeah, absolutely is a trigger for me, Ricardo. No doubt. No doubt. Yeah, so if you DM me on, so some people are adding me in Discord right now, I'll friend you back, and just friend me, I'll friend you back. And I'm going to create a special playlist that only whoever wants it from this webinar will get access to. Okay. And this video will be in there. No, I'm going to make the video just live for anybody. But I will, I'll give it to you. Well, okay. I'll tell you about, what is your Discord name? It's right there. He just posted it. Here, I'll put it again. So, but I will get it to you, and I'll do it right after this. So, okay, let me tell you a little bit about the pit. All right. We're going to get to the DOM, and I know people aren't here to hear sales pitch or anything like that. And believe me, this is not a sales pitch. I don't care if y'all join or not. But the pit is a private Discord group, and I've been running it for over 5 years. I trade my NQ screens live. I trade my ES screens live. They're real time in HD. YouTube, on the other hand, is like 15 to 20 second delay. We're very much about education. We have traders that have never traded a live lot, and we have traders that have been traded. My mentor is in the pit, is in my pit, and he is an ex-floor trader that is a genius. And he's amazing. And we've got everywhere in between. We've got Fibonacci traders, we have order flow traders, we have candlestick traders, and we have the only trader that we don't have is that nonsense Elliott wave. Like, Elliott wave traders never last a day. So they don't, like, but and we do open webinars 4 times a week to help people out understand what's going on, just to chit chat. We've had one Saturday, Sunday, Monday, and yesterday. So and then open groups that's just for the pit. I share chart books. Everyone shares, lots of people share their chart books and setups. Do we? It's about 282 people. Most are active. Everyone's trading. It's no bullshit, no politics. Yeah, there's some politics, but everyone's very friendly, and it's just a great group of people. And trading's very lonely. So it's a great group for people to get together and trade together on a day-to-day basis. And, you know, it's called PIT PMAG. It's called the PIT PMAG. And PMAG stands for PIT Mentoring Accountability Group. And really that's what it is. Like we hold each other accountable. Honestly, man, it's just a badass group. I'm very proud of it. If you want to know the truth, I'm very, very proud of it. And I love everybody in that group, man. I've had people in there for all 5 years. I've had people in there from 2 days ago, and everyone gets along and everyone fits in. So, you know, just check it out. Yeah, you might like it. You might hate it. It's cheap. It's not expensive. It's not about the money, but I would never do anything for free. So, and I would never ask y'all to do anything for free. So, but it's not expensive at all. And when you join, you get all the videos for free that I've ever done on order flow classes or setting up or anything. So there you go. There's the big 5-second spiel on the PIT. I would recommend you check it out. So, but I don't care if you do or if you don't. Yeah, everyone gets to make their own decisions, good or bad. Okay. Now, who wants to get to the DOM? Because the DOM is really where it's at and really where it's sexy. All right, give me a second to make a drink or to make a drink. I'm going to be making a drink tonight, probably taking a gummy too. So, by the way, I'm 46 with kids. So when I say I'm taking a gummy, I'm like not lying. I'm really probably going to take a gummy and have a drink and slap my wife's ass and chase her around the house a little bit. So there's that again for those that don't have it. Okay. So the DOM, all right. I love the DOM. It does take time to learn the DOM. There's no question about it, but Sierra Chart does an absolute amazing job at giving us the DOM that's an amazing DOM that we can customize and trade off of. Now, granted, there are other DOMs out there, you know, that are good. Jigsaw has a DOM as well, but I'm telling you right now, if you want the full package, you know, you'd be hard pressed to find a more affordable, more complete, badass solution that Sierra Chart gives us. So let's get to it. So there's two types of DOMs. There is a chart DOM, okay, and there's a trading DOM, okay. So this would be a trading DOM. The trading DOM comes with your entries, right? Your trade plans, your lots, your buy, sell, buy the bid, sell the ask, whatever. Okay, so this is the DOM that gets applied to here. And then your chart DOM under chart, and you put your chart trading DOM on, is applied to your chart. They're two independent specific DOMs. Okay, this chart is governed by trading DOM colors, and this chart is governed by your chart DOM colors, and both can be I have mine set up to be controlled by Globex or by global settings. All right. So for our purposes, because I already have this one set up and I want to walk y'all through setting it up, I'm going to go ahead and focus on the trade DOM. Okay. But it applies to both, just so you understand. Okay. Let me pull that one back up. Okay. So this is outside of the color scheme. This is your trade DOM, okay? Now, we're going to customize it so that it is powerful. On its own, this is not telling you much, okay? And remember, we went from, let's just review real quick. We came from the volume by price to the market profile with the volume by price to the footprint to the time and sales to the DOM. So we have literally stepped down in time frames to real time. This is real time, okay? So now to set this up, what we want to do is understand these are your resting orders and this is your price. So you come under here to customize chart trade DOM columns, okay? And we're going to set this up to be absolutely powerful.
New visitor.
First, now remember, this is the way I like to see it. You guys got to choose the way you like to see it, but we should all have the same thing on our DOM. How you have it displayed is your decision. So I move my price up, and then the first thing I want to do is I want to add my recent bid volume and my recent ask volume. Okay.
New visitor.
What exactly is the recent bid volume and the recent ask volume? It is your market orders. Okay. Without your market orders, we don't move off of zero. Okay. So our recent bid and recent ask are literally the aggressive buyers or sellers hitting the bid or lifting the offer. Okay. Does everyone understand that? So right now, 18 hit the bid at 75.75. 8 hit the bid at 75.50. 8 came back and hit and lifted the offer. 9 lifted the offer at 75.75. 10. Now 12. So now aggressive buying, lifting the offer at 75.75. Okay. Does that make sense? Okay. So if no one says anything, I'm going to assume that that makes sense. All right. Thank you, Ron. Thank you, Barry. Okay. So now what we're going to add is because everything I do involves a volume profile. Okay. Why? Because volume matters. Time means nothing. Okay. Now we're going to take the current traded bid volume and we're going to take the current traded ask volume. Now watch what I'm going to do here. If I hit apply, you get the bid volume and the ask volume, right? But what I want to do is I want a little bit more detail than that. So on the right alignment, I'm going to show the volume bars, and on the left alignment, I'm going to show the volume bars. Now I'm getting a good look at, I don't have to see the numbers, which I wish they would let me. And Ray, if you're listening, this is a request. Can I get rid of those numbers, please, and just have the volume histogram, please? So anyways, so you can't get rid of the actual volume numbers, but you can put the volume histogram on here. And this is telling us basically over the course of the day where you're building volume on the price. You don't have to actually see the numbers and do the math yourself. This is exactly where data feed becomes extremely important, but not yet. It's important here, but not the most critical piece. Okay, so now we have our volume histogram. All right. So now let's go into and add our pulling and stacking. I put it between the resting orders. Why? Because I want to see what the pull is and the stack is on the bid and the offer. It doesn't look right, man. It doesn't look right, Chad. I've tried everything under the sun. It just doesn't look right. Because if you do black, you still see black numbers hanging out in your histogram. If you do the same color, you still see the numbers hanging off the side. I just want to get rid of them. I want the opportunity to make them not visible. But we'll see. Okay. So now what I'm seeing is the pulling and the stacking of the offer and the bid. Right now, you can see that the bid is completely pulled, all the negative numbers. And you can see that the offer is completely stacked. So what that's telling you is that the price, the path of least resistance is to the downside. At this time of day, it doesn't matter. Okay. At this time of day, there's no sellers here that are going to push this thing down. But when the market is kicking ass, they pull all the bids, the price is going to come down if there's some sellers hitting the bid, right? If they pull all the offers and they stack the bid and you get aggressive buyers lifting the offer, the price is going to go up. So see how they work together. Okay. Now, man, I've been talking, boy. Let's see. So now what we want to do are the MBOs. Oh, and let me say this real quick. So you said, Ricardo, this is where so if you have CQG data or IB, they batch up their orders and they send them over, and it makes your bid stack completely wonky. Negative 20,000, negative 3,000. It's just completely bullshit. So with Denali, you get a very, very clean feed, and it absolutely works perfectly. With other feeds, you get absolutely ridiculous looking numbers over here, and you're constantly having to right click and clear this data. You don't want to do that. You want to accept the fact that you're going to have to spend a little bit of money and upgrade to Denali. If it is even more money, quite frankly, it might not even be more money. it might be cheaper, because quite frankly, man, Sierra Chart is about as cheap as it gets for what they give you. Man, we're blessed. Hey, Jonathan Dickey, have a good one, man. If you do, great. I mean, I would love to see you. I think you'll really enjoy it. Okay, so now what we're going to do is we're going to add the MBOs. Okay, so now the MBOs, for those that don't know, and by the way, I like to put a little general purpose column in here to give a little padding. And we're going to have to get a little funky with the MBOs, by the way. I'm going to show you all how to do it, because some of y'all are going to come in here and you're going to do this, and you're going to see some craziness. So now we have the MBOs. Now, okay, so this is it. My DOM is set up. Okay, it's perfect. This is I see the aggressiveness of the sellers hitting the bid. I see or the lack of aggression. I see the aggressiveness of the buyers lifting the offer, or the lack of aggression. I see. If I have a stacked bid, do I have aggressive buyers with bid support? I want to get long. Do I have a stacked bid and no one's buying it? Okay, well, there's no interest in buying. I don't want to buy myself. Is there a stacked offer and there's see, look at the stack on the offer, and they're hitting the bid with size. 20 just hit 74.75, and another just hit 74.50, 14 or whatever it was. Do I want to get short with them? Okay. Is the offer pulled? And there's buyers or there's sellers, but there's no offer support. Do I really want to get short with that? No, I don't. I want a stacked bid and aggressive buying. I want a stacked offer and aggressive selling. Okay, what you'll see is when the price is doing nothing, we're just chopping around, you have an equally stacked bid and offer, and equal size going back and forth. Computers are just playing footsie with each other, right? You want to get involved when it's time to get busy, not play footsie. All right. I was about to say a bad word. Okay. So the MBOs, what is the MBO? Look at this resting offer right here. 100 resting on the offer. 70 of that is a single lot MBO. There's a single lot 70, and my colors are reversed right here, by the way. That should be red and that should be green. There's a single lot of 70 sitting in that 95. Okay. There of the 89 that are sitting at 74, a single lot is 80. It's market by order. Okay. So it's your resting orders. One of those 80, look right now, well, they just took them 86 right there, just hit the bid, took every one of them. Okay. So they took the MBO and they took the 7, or the 6, somebody pulled one off. So we just saw it in real time. So you're seeing a stacked offer and you're seeing aggressive selling into the end of the day. Okay. Listen, let me give you all a piece of advice. Watch this during Globex. You're looking for the exact same thing, but it's like a tenth the speed. Okay. So there you go. Now, if you add the MBOs right out the box, you're going to see a shit ton of MBOs all over the place, because there might be 53 here and there might be 10 orders of 5 and 3 orders of 1, and they're just all stacked in here. So to change this, what you have to do is come under your global settings and go under symbol settings, find your symbol for the ES. Mine is FUS EP, FUS EPH. So go to FUS, go to EP. Come on. So this is how you fine tune your MBOs. I look at 50 or greater. I don't look at anything under 50. Anything under 50 is too much noise. So I'm going to find my symbol. I'm going to come under my symbol. I'm going to look at the minimum market by order quantity, and you set it to whatever makes you happy. Okay. You set it to whatever makes you happy. I recommend 50. Hit OK. You're going to go to your data plan. You're going to sign in and sign out, and then it'll reset your MBOs to be correct. And there you go. Holy shit, we've been talking for a long time. All right. I'm going to have myself a white Russian. Actually, I call it a Caucasian now, since Russia turns out to be a bunch of assholes. But I'm going to have myself a Caucasian and a THC gummy. All right. So let's open it to questions. I've covered everything, man. And believe me, I could go hours into each one, how I use them, specifics of the footprint of the DOM. Man, I am glossing over it. If you do join the pit, you get the videos and you can watch them at your own discretion. I'm going to release the footprints so that you guys can watch it. Like I said, they'll be available till Friday. Come to the YouTube live tomorrow. You'll see it work in real time. You can ask questions. I'll answer questions there. But does anyone have any questions right now? And believe me, I know I glossed over a lot of stuff, but there's so much data to go, or so much stuff that you can, it's so much fun. And and Sierra Chart's getting us such a badass setup that, I mean, you really could just get lost in it. Let's see here. You're giving JRE a run with how long you've gone. What is JRE? Oh, and by the way, just another shout out, Edge Clear. So if you want a badass setup in the pit, now listen, this is not a sales thing for the pit, but Edge Clear has given the pit members special rates that you can't get from Edge Clear. Oh, Joe Rogan, on your own. If you did join the pit and you go with Edge Clear, or if you're not in the pit and you go with Edge Clear, they can set you up with Sierra Chart, Teton, or however it is, Teton routing and all that, and everything that you need. Highly, highly recommend, man. Call Max. He is so smart when it comes to helping people out. He's a good dude. Edge Clear is solid as they get. They will set you up with Sierra Chart. If you're in the pit, you get special rates. You can mention that to them. But I highly, 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 highly recommend that for your setup. And there you go. So let's see here. Not related to specific chart. And I said that only because I know they did a webinar recently as well, and I hope you guys took advantage of it. Not related to a specific chart. I just want to make sure I'm getting set up my data trade service settings routing correctly. Can you walk through configuring Sierra Chart to use Denali, but also, oh, yes, I can. Hang on, Michael. Yes, I can, because I'm actually going to give it to you straight from Ray, because he set me up and I saved the email and I post this all the time. So hang on, I'm going to give it to you. I just got to locate the email real quick. And I did this last night for an open group that I was in, so it should be readily available. Okay, so I have it under rookie question. There we go. Okay, so this is directly from Ray, who's a badass, by the way. I really like Ray. I hope he's a great guy to work with. Okay, so here are the exact instructions to get exactly what you're asking for, Michael. No, it's on my trade window. I actually I have this for my ES is on my right monitor. I trade off of this. So here you go. So copy that down. That's exact, because this is exactly the setup that I had to go through, Michael. And then there's one other little piece. Right here. If you go through those steps, you will have CQG order routing, but you will have Denali data. Oh, what's up, Butters? Nice. I love that name. Any other questions? Well, Franklin, man, I tell you what, listen, if you ever get an opportunity, I would check out the pit and those videos. You will learn everything you wanted to know and more. Listen, all this that we went over today, I did a 31 session, all an hour or an hour and a half long session. They're recorded. They come with a membership to the pit of all these charts, how to use them, analyzing order flow and everything else. So everything that we covered today, believe me, you can go a lot more in depth than we have today. But listen, if this was good for you guys, I will work with Ray to set these up regularly. You don't have to join the pit. I'll set aside time to meet with you guys and go over certain things. But I highly recommend you following or subscribing on YouTube because I do a lot of stuff on YouTube. Can an alert be set regarding order flow patterns? Not to my knowledge. Now you can find anyone that'll sell you a custom study that will tell you that they are. But listen, here's the thing, Dan. If you watch it, it will just become clear to you. Listen, I can bridge the gap between what you know about order flow and what you don't know about order flow. I can shorten the time frame, but nothing replaces screen time at all. So I can show you the path, but you're going to have to spend the time watching it. Okay. And it will become clear because you will be able to see the patterns just like I do. And it's not hard. Listen, if I can do it, you all can do it. Enjoy the gummy bear. I will, believe me. Does EdgeClear use CQG? I think you can do EdgeClear even better. Do Teton. I think it's Teton, T-E-T-O-N, with Sierra Chart, and it's cheaper. And I would get away from CQG if you want to know the truth. But you don't have to. I will. I've got a bunch of people have sent me DMs on Discord. I just can't get to them just yet. Nice. Yeah, man. EdgeClear is legit. And if you don't have EdgeClear, if you're Canadian, we have Iron Beam. Iron Beams did a huge job, a huge deal for us. Iron Beam did a huge deal for us in the pit for pit traders with great rates, no monthly fees. And they're good for Canadians. And I think they're also really good for Europeans, but I think EdgeClear is also good for both. Like I said, they're both good dudes. Like Mike Murphy at Iron Beam and Max Timmons at EdgeClear. You can't go wrong. I would probably look for Max Timmons and EdgeClear because they are working specifically with Sierra Chart and Teton. Now, here's the thing. It might also be Iron Beam, which would mean it's just a toss-up. And what I tell everybody in the pit, call Mike Murphy and call Max Timmons and make an educated decision for yourself. But they have both done amazing things with rates, round trip fees, and commissions for pit members. Teton, French for all right. Well, listen, that's all I got. If there's no questions, like I said, hit me up in Discord. I'll get you those videos. I'll get it set up here soon. I'm going to take a break for a minute. And look, I hope to see a bunch of y'all on YouTube tomorrow. It's fun. We have a good time. We trade. We keep it to trading. We don't dick around. And wish y'all the best. So take care, and I hope y'all do good trading. You're welcome. Y'all have a good one. And I'll get this video out ASAP.